Thank you, John. I agree with John. Barrick is back. Unfortunately for me, that means another long-standing Barrick tradition is also back, and that is that the second speaker at every Barrick annual general meeting has this impossibly high crossbar you have to deal with. It started with our founder and chairman emeritus, Peter Monk, and his legendary and riveting speeches, always to a packed house, always that just came to hear Peter speak. And now that's evolved to our new executive chairman, John Thornton, with his unique gift and mastery of the English language. So I can tell you, for a normal person, these are not easy acts to follow. I did get some good advice this morning, though, from my wife. Excuse me. As I was leaving the house, I mentioned to her it's our AGM today, a pretty important meeting for the company. She said, "Oh, well, then make sure you present well." I said, "Well, thanks." Everyone's an expert. Before I start, I'd like to point out that I'll be making forward-looking statements during the course of my remarks. 2015 was a foundational year for Barrick. A year ago, we were grappling with falling gold prices, some skepticism around our ability to reduce our debt level, and an inconsistent track record of execution. We were determined to reverse that trend, so we laid out a clear plan for how to tackle the persistent issues that were facing the company head-on. The plan refocused the company, and we reestablished a driving focus on the original strands of DNA, as John describes, that originally made the company successful. Those consisted of a partnership culture, a decentralized organizational structure, an intensive focus on creating long-term value as measured by free cash flow per share, and greater financial discipline supported by effective portfolio management and a healthy balance sheet. As a first step, we set out 4 key priorities for 2015, and we made a commitment to stay focused on them and to do exactly what we said we would do. Our priorities were to streamline the business by embedding a lean, decentralized operating model, to strengthen the balance sheet by reducing our debt level by a minimum, or total debt by a minimum of $3 billion, to refocus the company on maximizing free cash flow per share, and to optimize the portfolio around our best assets in our core regions. Let's take a look at how we did. First, we completed the transition to the decentralized operating model. This meant that we, in essence, focused our head office on doing 3 things: setting strategy, allocating capital, and managing talent. Our head office is now less than half the size that it was just a little over 2 years ago. We've eliminated management layers between the head office and the operating mines. In essence, we've created or performed an unclogging of the arteries, as we like to characterize it. We then accelerated the speed of decision-making throughout the business, and we did this through the launch of what we call our Business Plan Review System, or BPR. The BPR connects all of our mines with each other and the head office by a video link conference once a week, and now ideas and experience are shared in real time. And this has materially improved the flow of information throughout the company. I'd like to give you just a practical example of this. Last year, our Pueblo Viejo mine in the Dominican Republic, the newest in the portfolio we're very proud of, PV uses autoclave technology. And for any of you who know Barrick, you know that our Goldstrike mine in Nevada, in fact, was a pioneer of autoclave technology. These are, in essence, big, large, pressurized vessels, and apologies to my technical colleagues. But it's a very advanced science and very effective in mineral processing. But as PV was going through the ramp-up, the general manager at the project, during one of our BPR calls, mentioned a problem that he was grappling with respect to the autoclaves. Well, on the same call was our general manager from Goldstrike. He immediately responded that they had dealt with that very same issue 4 or 5 years ago, and during the course of the call discussed what they needed to do, but moreover, immediately sent a team of people from Goldstrike to PV, and within a very short period of time, the situation had been resolved. I mention this example because when I think back 5 or 10 years ago, it's impossible that we could have dealt with that particular matter as responsively as we did, and we can today. You would have had a GM who would have reported that issue to a regional operating person, who would have reported it maybe to a regional COO or regional president, then up to a COO in Toronto. Now, I'm not saying the matter wouldn't have been dealt with, but it's impossible that it could have been dealt with that kind of turnaround time and that dispatched with that level of efficiency. I also say this because I have to admit, when we first put the BPR process in place, I wasn't skeptical, but I wasn't entirely sure of how it was going to work. But having seen that and just many other examples of how effective it's been since, I'm completely converted. Moving on, as this slide indicates, we also achieved our second objective for the year, and we exceeded our $3 billion debt reduction target. As a result, we reduced our total debt for the year by 24%. We ended 2015 with $2.5 billion in cash, and we amended and extended the majority of our undrawn $4 billion credit facility. Third, through greater capital and cost management, we generated nearly $500 million in free cash flow in 2015, and that's following several years of cash outflows. In fact, this represents a $1.6 billion swing in free cash flow generation since 2013, and that's despite a fall in the gold price of about $250 an ounce during that period. In 2013, we would have required a gold price of $1,641 an ounce to generate free cash flow. In 2013. By 2015, we reduced this to $1,046 an ounce, and this year we're targeting to be free cash flow positive at $1,000 an ounce. So we're making really good progress. And finally, we delivered on our fourth priority. By selling a number of our non-core assets, we've concentrated the portfolio on our most profitable mines in the Americas, and these are the assets with the best potential to generate growth. In fact, this year, about 70% of our production will come from our 5 core mines, that being Goldstrike, Cortez, Pueblo Viejo, Lagunas Norte, and Veladero, and that'll be at a very low all-in sustaining cost of $660 to $730 an ounce. We also created 2 new strategic joint ventures during the year. We formed a 50-50 joint venture partnership with Antofagasta Minerals at our Zaldivar copper mine in Chile. And in Papua New Guinea, we welcomed Zijin Mining of China, China's largest gold producer, as a 50-50 joint venture partner at our Porgera mine. Both of these partnerships provide opportunities to leverage our collective strengths, and we're hopeful that there'll be opportunities for us to work together as we move forward in the future. Let's take a look now at how the business performed in 2015. Thanks to the quality of our assets and the talent of the people running them, 2015 was a very strong operating year. Our original gold forecast, production forecast of 6.2 to 6.6 million ounces was adjusted to reflect the effect of asset sales and a mechanical challenge at Pueblo Viejo we confronted late in the year but has since been resolved. We met our updated guidance with production of 6.12 million ounces for the year. And on the cost side, at $831 an ounce, we significantly outperformed our initial all-in sustaining cost guidance of $860 to $895 an ounce. This reflects our ongoing efforts to drive down costs throughout the company, and that trend's going to continue. Turning to our copper business, we met our operating guidance here too. We produced 511 million pounds of copper at all-in sustaining costs of $2.33 a pound. And that was based on solid performances from Zaldivar and Lumwana. Moving to our financial results for the year, we reported adjusted net earnings of $344 million. The net loss of $2.8 billion reflects $3.1 billion in impairment charges, and that was primarily related to adjustments to our short and long-term gold price assumptions. Operating cash flow was $2.8 billion, and as I noted earlier, we generated nearly $500 million in free cash flow. Now, although we met our objectives for the year from that performance perspective, we weren't satisfied with our health and safety performance. While we've done some great work to improve our overall safety record, we deeply regret the loss of 3 of our colleagues to workplace accidents last year. There's no greater priority for the company than the health and safety of our people. And these fatalities, clearly they're unacceptable, and they're a sobering reminder for us that our work isn't done until everybody in Barrick goes home healthy and safely every day. Another area we were disappointed with is our environmental performance. While our overall metrics exceeded our goals last year, that progress was overshadowed by an unfortunate event at our Veladero mine in Argentina. This involved the discharge of a processing solution to the environment through a sluice gate, which shouldn't have been open, and unfortunately it was. Now, in that situation, we acted quickly to contain this situation. We worked with the local regulators to put mitigation in place and to fix it so we know that we won't have that same issue in the future. Also, extensive water sampling that we conducted showed that we posed no risk to human health or to the aquatic environment downstream of the mine. But in any event, an incident like that is entirely unacceptable. So we're placing a greater emphasis on environmental performance this year with higher standards, and it's tied directly to compensation. That goes throughout the company. We can do better, and we will. So now let's take a look at 2016. We've established 4 priorities this year too, and like last year, we intend to stay laser focused on them. The first priority is growing free cash flow per share, as John Thornton mentioned a minute ago. And as I touched on earlier, this year our goal is to generate free cash flow at a gold price of $1,000 per ounce, and we're well on track to achieving that. Our second priority is to continue to focus on improving our balance sheet. You might recall last year when we set the $3 billion debt reduction target, we said that wasn't the final step, but the first step along the way. This year, we intend to reduce our total debt by another $2 billion. We'll use the same three levers as we did last year, drawing on our existing cash balances, delivering free cash flow from operations, and through non-core asset sales and potentially partnerships and joint ventures. Our third priority is all about operational excellence. Our mines are already among the lowest costs in the world, but we know they can do better. We've set a goal to drive our all-in sustaining cost to below $700 an ounce by 2019. And we're going to do that through our best-in-class or productivity improvement initiatives. This is being rolled out at every operation around the world this year, and we'll provide more detail on that in a minute. Finally, our fourth priority is to continue our emphasis on capital discipline. Requests for capital are evaluated by detailed commercial, technical, and peer reviews internally, and that's before they go to our restructured and strengthened investment committee, where they receive an even additional level of robust review. I'd like to thank Sean for the key role he played in establishing this process and strengthening our finance and business planning groups. Like you, John, I thank you, Sean, and wish you well with your next endeavor. Turning to our 2016 guidance, we expect gold production from our streamlined portfolio to be between 5 and 5.5 million ounces this year. Our initial all-in sustaining cost guidance for the year was $775 to $825 an ounce. However, we're pleased to have already reduced this by $15 an ounce to $760 to $810 an ounce. This reflects early productivity improvements and our continued focus on capital discipline. We've also lowered our cash cost guidance by $10 to $540 to $580 an ounce. Our 2016 copper production guidance is 370 to 410 million pounds. This doesn't include production from our new Jabal Sayid joint venture in Saudi Arabia, which is still in commissioning, but we expect it will reach commercial production this quarter. Our original all-in sustaining cost guidance for the year was $2.05 to $2.35 a pound, but we've reduced this as well by 10 cents to $1.95 to $2.25 a pound, and that's largely due to continued cost improvements at Lumwana. Lumwana could also benefit from legislation that's working its way through the parliament in Zambia. In essence, what it will do is reduce the royalty rate on open pit mining in Zambia from 9%, as it presently exists, to 4 to 6% tied to the price of copper. It'll be a very positive statement, we think, for investment in Zambia, and obviously will benefit the Lumwana mine. Turning to our first quarter results, which we released earlier this morning, free cash flow for the quarter was $181 million, and adjusted net earnings were $127 million, or 11 cents per share. We produced 1.3 million ounces of gold at low all-in sustaining costs of $706 an ounce, and we're on track with both our production guidance and our improved cost guidance for the year. In addition, during the quarter, we achieved $842 million, or 42% of our $2 billion debt reduction target for the year. And finally, relying on the combined strengths of our exploration, corporate development, and finance leaders, we formed a growth group. They're focusing on ways to increase and optimize the development of our reserves and resources, of course, all with the objective of growing free cash flow per share. So that's a brief overview of our Q1 results. For anybody who's interested, we'll have our quarterly earnings call at 4:30 this afternoon, and it's webcast, so you're welcome to listen in. I hope you're getting a sense for the foundation we've established for the business. Building on the foundation, we've set 3 strategic goals that will underpin our ability to create value in the future. The first is to continue to build a distinctive partnership culture. The second is to generate industry-leading margins. And the third is to deliver top portfolio management. A commitment to building partnerships of depth and trust, both externally and internally within Barrick, is critical to us. As John has articulated many times, with the support of local communities and host governments, we remove their minerals from their ground, and in doing so, we create wealth for all stakeholders involved. Therefore, it's vital that we be open and transparent, and what we intend to do is create local partnerships of trust, create and maintain them. Our second goal is to produce the leading margins in the industry. This underpins our objective to reduce all-in sustaining costs to below $700 an ounce by 2019. Whatever the gold price may be, we'll constantly push ourselves to reduce cost by being first in productivity and efficiency. Our intent's really to be able to weather gold price volatility better than any other producer. As a 21st century company, I can't overstate the opportunity we see in making much greater use of innovation, technology, and real-time data. We touched on that a few minutes ago. The way we operate today really is much the same in many respects as it was 30 years ago. We've grown in scale and complexity, but our systems haven't evolved at the same pace. I'd like to share an anecdote. Our Chief Technical Officer, Bassi Marie, has got an interesting slide PowerPoint presentation. As you go through it, you get to about slide 10 or 12, and he says, hey, does anybody remember what we saw on slide 8? Of course, nobody does. So you go back to slide 8, and he shows a picture of, circa 1950 underground mining. He goes, the reason you didn't notice is because, in essence, we're doing the same thing today as we were doing in the 50s and 60s. So to us, it just shows you where the opportunity lies and the fact that innovation will bring a lot more to the business, and you can expect to hear more of that from us, as John Thornton has indicated. But in order for us to even begin to realize our vision of being truly excellent, we have to collect, analyze, and cross-reference data in real time. Well, this will allow us to eliminate waste, strengthen the underlying business processes, and ultimately, what Best in Class is designed to deliver us is one management operating system with reliable and timely data. Our third strategic goal is to deliver superior portfolio management. This means measuring our production in quality, not quantity. We'll evaluate existing and new opportunities through the lens of growing free cash flow, and we'll continue to prioritize growing cash margin over growing ounces. We reported 92 million ounces of proven and probable gold reserves in 2015, and that's down only slightly from the prior year. We used a two-tiered pricing approach, applying a gold price assumption of $1,000 an ounce between now and 2020, and $1,200 an ounce beyond that over the long term. This allows us to maximize the value of our reserves in the short term while maintaining development optionality for the future. And we have a big advantage given the very high quality of our reserves. As this slide shows, at 1.3 grams per ton, our average reserve grade is significantly higher than the senior peer average of 0.8 grams per ton. If you consider that our core mines have an even stronger grade profile of 1.9 grams per ton, it's more than double the senior peer group average. And remember, about 70% of our production will come from those mines this year. We're also fortunate to have one of the best project pipelines in the industry, and we're managing it with greater capital discipline than ever before. Turning to the projects themselves, Cortez in Nevada is located in a district that just keeps on delivering. The Deep South expansion at Cortez could contribute annual production of 300,000 ounces a year, and average all-in sustaining costs for this project are very low at about $580 an ounce. The limits of the underground deposit haven't been defined, and drilling's indicated the potential for new targets at depth. And only 6 kilometers away from Cortez, we're advancing feasibility work for an underground mine at Gold Rush. That's one of the largest new discoveries in the last 15 years. It already has more than 8.5 million ounces of measured and indicated resources, and there's excellent potential to add more. The pre-feasibility study estimates a mine life of 21 years, with average production in the range of 440,000 ounces a year. That's for the first 5 full years of operation, and that's at a very low all-in sustaining cost of $665 an ounce. Adding to our enthusiasm, early drilling at the nearby 4-mile target has intersected mineralization that's well above even the robust grades we're seeing at Gold Rush. So you can get a sense for the district and why we're so excited about it. Our Turquoise Ridge mine, also in Nevada, it has the highest reserve grade in our operating portfolio at a very impressive 15 grams per ton. We've completed a feasibility study at Turquoise for a phased approach to installing a third production shaft, and that could increase production from 280,000 ounces a year to about 500,000 ounces a year at an all-in sustaining cost of about $650 an ounce, also very low. That's on a 100% basis. Turning south for a second to Peru, we've completed a pre-feasibility study on a plan to extend the mine life at Lagunas Norte by 9 years. That's by accessing deeper refractory ore. If approved, first gold production could be in 2021. Average production for the first 5 years is estimated about 240,000 ounces a year at all-in sustaining costs also at $625 an ounce. Low all-in sustaining cost. Importantly, the addition of a refractory processing facility at Lagunas Norte could open up and unlock potential for other deposits in the district. Our portfolio also includes some of the world's largest undeveloped gold deposits, such as Donlin Gold, Cerro Casale, and Pascua-Lama. each of which provides significant opportunity to higher gold prices. One of Barrick's most recognized strengths is in our exploration expertise. Alturas on the El Indio Belt is our most recent discovery. We've already defined an initial resource of 5.5 million ounces, and scoping is underway at Alturas. It has tremendous growth potential as well. Interestingly, the scale and style of mineralization is remarkably similar to Veladero, and although it's early days, we're very encouraged by the results we've seen so far. So in closing, I hope I've given you a clear picture of our priorities for the year and our goals for the future. We're working hard to drive a high-performance culture throughout the business, and we're going to challenge ourselves to do better all the time. We've set ambitious goals, but they're achievable, and we'll deliver on them. Just before we end, I'd like to thank our Executive Chairman, John Thornton, and all of our board. We appreciate your guidance and support and your continued encouragement. I'd also like to thank and acknowledge the truly exceptional people at Barrick from around the world, some of whom are in the room today. They really drove our progress last year, and they're delivering on our results already in 2016. And finally, I'd like to thank our shareholders who continue to provide us with very helpful, insightful feedback. We very much appreciate your support. That concludes the presentation. Thank you very much.